Kadena, the project that once promised to revolutionize the enterprise world, has just vanished, and its token crashed more than 60% in barely an hour and a half. But it's not the only hit to the ecosystem. Bitcoin miners are drowning in debt over $12 billion as they try to survive after the latest halving. And yet, the market still looks upward. Some investors see Bitcoin on a path to $500,000 as long as the 2020 pattern repeats. Ethereum is preparing its biggest technical leap in years, and Solana has just achieved something historic, its own spot ETF in Hong Kong. In this video, we'll break down the charts for Bitcoin, Ripple, XRP, and other cryptocurrencies. It's been a busy week for crypto, with headlines that showcase both the structural challenges of certain projects and the technological advances and growing institutional integration of the sector. Let's start with a case that shook the community. Kadena, a blockchain that once aimed to reinvent enterprise smart contracts, announced the definitive shutdown of the company behind the project. The news triggered a collapse of more than 60% in its token, KDA, in just an hour and a half. In a statement, the team explained that market conditions made it impossible to keep operating. Founded in 2016 by Stuart Popjoy and Will Martino, both with experience at JP Morgan and the SEC, Kadena set out to be a business-focused blockchain, but its case shows how hard it is to compete with giants like Ethereum and Solana. During the 2021 boom, its market value reached $4 billion. Today, it barely exceeds $30 million. Even so, the network will keep running thanks to miners, though without official maintenance. The team plans to release a software update so nodes can operate independently, while the community will decide what to do with the tokens that haven't been unlocked. This shutdown puts the fragility of some projects into perspective. Even with solid tech, without traction or liquidity, surviving in a mature market becomes nearly impossible. Here you're looking at KDA's chart. It certainly doesn't look great. That said, it has always been a highly speculative asset. Seasoned investors could spot it in those falling wedges. The price kept breaking out to the upside, offering some very attractive trades down the line. Just look at this asset's past behavior and how institutions used it to gain an edge on the market. But it seems the party for KDA ended abruptly. The company itself has confirmed they're walking away and shutting the project down. There's nothing left to speculate on here. This token has capitulated. Notice how price is hugging the zero line. This yellow line marks zero, and it looks headed straight there. It's effectively the death of a company, and for that reason, we see its token nearing the end as well. And another headline shows that even the bigger players are facing financial strain.
According to a report by VanEck, total debt among Bitcoin miners surged in a single year from $2.1 billion to $12.7 billion. The jump reflects the need to stay competitive after the April 2024 halving, which cut the block reward to 3.125 Bitcoins. With margins getting tighter, many companies chose to take on debt to refresh their hardware and scale up. Some miners, like Bitfarms, TeraWulf, or Iron, are even diversifying into AI services and high-performance computing, leveraging their existing energy infrastructure. The idea is to balance exposure to Bitcoin's price with steadier revenue coming from demand for compute power. VanEck frames this shift as a deep transformation, a move from purely speculative mining to a hybrid industry that blends blockchain, energy, and advanced computing. The mining sector is clearly entering a more mature phase, pursuing greater stability, something that is ultimately positive for Bitcoin. Meanwhile, the broader macroeconomic backdrop continues to favor Bitcoin. Jesse Myers, co-founder of OnRamp Bitcoin, argues that Bitcoin's price could reach $500,000 if the 2020 pattern repeats, when a sharp rise in global money supply drove its value up roughly six-fold in about a year. Global M2 has grown 6.2% over the past 6 months, the fastest pace since the pandemic, and some investors believe we're seeing the start of a new phase of monetary expansion if central banks begin cutting rates in 2025 as the market expects. That could unleash another wave of liquidity that pushes Bitcoin higher as a hedge against inflation. I strongly agree that if system-wide liquidity keeps rising, especially with the recent wave of institutional participation in the crypto ecosystem, those flows can favor Bitcoin over equities or more traditional investments. We're already seeing how that incoming liquidity does in fact find its way into Bitcoin. So if we expect future rate cuts to increase market liquidity, it's reasonable to assume a portion of that liquidity will end up in Bitcoin. I'll set aside the recent pullback in lending that we're seeing. It can certainly weigh on liquidity, but if you're here to speculate, don't focus on the now, focus on the tomorrow. And I think that makes my point clear. While Bitcoin looks favorable, Ethereum isn't lagging behind. Its It's moving ahead with its latest upgrade, Fusaka, scheduled for December 3. This release adds a per-transaction gas limit to make block usage more efficient and to pave the way for parallel execution, one of the big milestones on its roadmap. It also includes PeerDAS, an innovation that stores only random fragments of data, cutting resource usage without compromising security. These improvements lay the groundwork for the future Glamsterdam upgrade, which will kick off true parallel processing of transactions. It's always worth staying on top of updates, especially on Ethereum's blockchain, because even if we speculate on crypto markets, let's not forget that behind these cryptocurrencies, setting aside the vast world of meme coins and focusing on the assets that really matter, there's real substance. There's technology, there are teams, there are companies. Ethereum keeps working on its blockchain, maybe not at the speed we'd all like because it hasn't been easy to improve the infrastructure, but we can see the market is giving it a vote of confidence. Keep in mind that with these kinds of upgrades, if expectations are positive, the crypto market often reprices the asset ahead of the event, and as we get close to the upgrade date, we can see a pullback. Institutions buy the rumor and sell the news. That's why it's important to put a name and a date on these upgrades so we can factor them in when making long-term spot investments, and especially for futures traders, for the warriors out there. And before we dive into the charts, here's a headline that cements Asia as an epicenter of regulated adoption. Hong Kong has approved the first spot Solana ETF, making it the third cryptocurrency in the region with a product of this kind after Bitcoin and Ethereum. The fund, managed by China Asset Management, trades on the Hong Kong Stock Exchange and allows investments in both US dollars and yuan. This decision strengthens the city's role as a bridge between crypto innovation and traditional capital markets. Solana, known for speed and low costs, keeps gaining ground as core infrastructure for payments, decentralized applications, and tokenized assets, a trend that could cement it as a preferred network for institutions. Solana's performance has been undeniably impressive. Facts are facts, and with the first Solana Spot ETF now approved in Hong Kong, doors are opening to greater institutional capital and liquidity for Solana and for crypto broadly. News like this is absolutely worth celebrating. So let's turn to the markets. We'll start with Bitcoin. On the 4-hour time frame, price action suggests institutions continue to defend this key support zone, roughly around $101,864. In other words, the $100,000 level remains actively protected by major investment funds. I'm going to zoom in a bit so you can see I'm working a creek here. I've been speculating that large institutions may be compressing price, building an accumulation process to eventually break to the upside. Under that hypothesis and dropping to the 1-hour time frame, notice how in our last Crypto Insight Premium live stream, we flagged this price level, this dotted line, as a great spot to look for long entries in Bitcoin. Retail is selling, and in my view, institutions are buying. Well, we've been buying too. We have to keep supporting the move. With Bitcoin, we're giving it very little room to fall. I don't know if you've noticed, but the downside allowance is minimal, yet we still need to manage this area. Careful with the cross analysis. If Bitcoin dips here and only Bitcoin dips while the rest of the market is at least a year and a half away from a similar move, there's nothing to do up here in Bitcoin. We'll look lower. The analysis has to stay alive, always. If it doesn't, we're going to run into a few surprises we'd rather not see or suffer, okay? We can see that at first, you could have bought Bitcoin at this point, taken profits right at the creek, and then re-entered long at a key level, whereas of today, Bitcoin keeps pushing higher.
Likewise with Ethereum, we think it's also working a dynamic creek that we expect could eventually break to the upside. We had been watching a demand line where it would make perfect sense to wait for a fake out below that line, and once Ethereum springs that trap, we'd look for long setups in the futures market. What I like about Ethereum here is that demand line. It's a great proxy. In plain terms, the buy opportunity on Ethereum is also clear. Let it come into that area, that's the entry. If it gives us the trap, even better, an excellent long. As you can see, these are extremely clean operational trades. In this case, Ethereum has already offered about 6% in the futures market. Traders know that's huge. And now look at BNB. We had been hunting for opportunities in this zone, which we found by pulling a volume profile over this micro accumulation process. The market gave us 2 chances to join on the long side. Watch how we explained it live. Here's the defense zone on BNB. To me, it's key. It's the anchor point. And look at how price is reacting. It can fake it. It can absolutely fake it. No problem. First BNB entry, this level. Second, a liquidity grab we'll see better on the M15. If they trigger a trap from there, that becomes the second key spot. There is room for a dip into the first opportunity. Very close, which is why I propose it first. Or they can run a trap and hover around here. We'll read it in real time. Anything that doesn't break this blue rectangle structure is interesting. Interesting for keeping the long bias. The first opportunity didn't play out, but the second did hit the first target. It reached the creek. Remember, not long ago, we said we'd start playing ping pong, looking for shorts at the highs and longs at the lows. We anticipated, based on our understanding of how markets work, that a range phase was
was very likely to begin even before it actually started. Now, let's break down Bitcoin and XRP.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
As I was saying, the entire crypto market is showing signs that it may be starting a bullish accumulation process. Bitcoin has just hit a very important structure after the Black Friday crash, and price is reacting on that level. We can say the same now for Ethereum. Notice how Black Friday conveniently tapped a key structure, and crucially, look at volume and look at delta. Sellers were absorbed. In XRP's case, note the massive drop it took on Black Friday, and again, look where the market responded. Not to mention the immediate powerful recovery. Now, price is shifted into a range where if you analyze the volume, you can clearly spot the trap. We saw a climactic move backed by heavy volume and delta leaning to the bid. On a shorter time frame, we're also seeing retail being absorbed. And with Solana, it's more of the same. Notice how price is reacting on a defense zone that Black Friday defined, one they had already marked earlier. They tagged it and then tagged it again twice. Now look at the volume on that drop. Volume spikes, delta leans to the bid, and it goes nowhere. They're absorbing retail. Check BNB. It's working a very similar structure. I'd even say we can tolerate, why not, some additional downside. Could we see a bearish climactic flush? It's possible. That's on the table for the crypto market as a whole. Even so, our stance remains constructive. Here we're looking at total, the market cap, and you can see the entire market working a macro defense zone. From there, I'd ask, why not spring a trap? It could keep playing out and then continue higher, and that would be fine. Now look at total 3. It shows something very similar. Check this anchor point. We know this is the correct anchor point because when institutions work these kinds of moves, we have to stick with the highest level. That's the key spot. From there, with this white line, if we look to the right, Black Friday conveniently closed above it. Then they ran a test, another test, and another. What I'm saying is institutions are working this price level, the 976.41 level. That's why watching total 1, total 2, or total 3 helps a lot as a market proxy. And as I was saying, what's so bad about a climactic move as a trap before continuing? It may happen, or it may not, but the overall sentiment is positive. Now, let's go to the total 2 chart. Look at how they're working this structure. On Black Friday, they recovered quickly, they set the structure, they confirmed it, and confirmed it again. That's why it wouldn't surprise me to see a climactic flush play out before eventually resuming the path higher. Right now, there's nothing in the crypto market that makes us negative on the future of the asset class. We'll keep favoring the long side because we must not forget what happened on Black Friday. People panicked, sold everything, and that retail selling was absorbed by institutions. If institutions bought what fearful retail sold, that's something we can't overlook. All of this is a consumption of time meant to keep confusing retail while institutions continue building long positions, and when they have enough, they'll be ready to extend. If you found this advanced technical analysis useful, drop a comment with your opinion. And remember to like the video, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Share this with friends, family, and other trading and crypto communities. Good luck, and see you next time.